we are very clear we're not going to invest in quantum hardware, right? Because the cost computing, right? Building quantum computers, although there are a few companies that have raised capital. I think our thesis is like, if you were to invest, is a lot more money that will be required. And number two is selling from India also to the world when you have these kinds of might be much harder.
Very futuristic. I think we actually have to understand what's happening in the world. Let me be very frank with you. So actually, I have even been told that I think we should start going and attending robotics conferences outside to understand what's happening, because some of the technologies are way too ahead outside. So building a world class company in robotics from India, I don't know it. Okay.
Hi, wherever you're joining me, I hope you're doing well. Welcome to India Tech Report, a podcast dedicated to chronicling and supporting the growth of India's deep tech and climate tech startup ecosystems. I'm Hari Arakli, and in today's episode, I bring you part 2 of an interview with Naganand Doraswamy, managing partner, and Suryaprakash Konanuru, CTO at Ideaspring Capital in Bengaluru. In this episode, we pick up the conversation with a brief discussion on what the two VC investors are seeing when it comes to the growth of translational research in India. And I want to add that this was in the broader sense of any movement from scientific lab to commercial product, and not just in the medical field where the term originated. And if you stick around, you'll hear Naganand and Suri discuss their views on how early stage investing in deep tech is changing. Can such investors make meaningful investments in highly capital-intensive sectors such as robotics, nuclear fusion, and quantum computing hardware in India, getting something not quite right, but moving on, and whether AI is changing their work as well, and in what ways? And as promised in part 1, we take a quick look at what might represent a Flipkart moment in India's deep tech sector and the evolution of Ideaspring itself from Fund 1 to Fund 4. Let's go. What are some sort of heartening things that you're seeing in terms of the whole translational side of things now beginning to, turn into startups?
Yeah, actually, what we are seeing is there are a lot of younger professors also, basically who have done research and actually they want to commercialize it. Like, making money is good. That's the big change I see, right? Basically, previously we always used to think that research is for good cause, but nobody was looking at commercializing it. And actually, so that's changing. That's a very good sign, because people who have done the research are ready to actually take sabbatical and actually build a startup. So that is the biggest change we are seeing across IITs, IISc. That's a huge change, which actually is very heartening to us, because we get a chance to work with really great guys and actually help them in actually not only making, they know, come with technology, they are actually they're dons in their technology, this thing, but how do you build a product, or how to go for GTM, and those kind of things we can try to pitch in, right? So that way it's a very good combination, and this is because of the research angle. They also come with a huge moat, right? And they can build products which are world class. So that's a very happy thing for us.
So in India, if you want to deep tech, unfortunately, the only source at this time is through universities like IISc, IITs, or whatever. Because in the industry, we still are not doing really deep in research, which is unfortunate, right? I mean, that is changing. That has to change, because I hardly see people coming out of the industry with some real tech or real science ideas. Very, very few. Examples are very few across all the funds, I would say. Because, you have the government labs, but, the first time you have seen people coming out of government labs and doing startups is ISRO. But you don't have examples from NNL, you don't have examples from DRDO. ISRO is only government PSU where people have come out and, done some work that in the space, in the space, pun intended there. But otherwise, very hard to get these kinds of ideas. Yeah, hopefully we'll get some from Microsoft or Google or whatever. But Indian companies per se, if I have to get a deep tech idea out of some other companies, you can't. There's nothing available. So hence we are very restricted in the number of places where you can go get these ideas and implement. And then it's very hard for professors also to keep on churning startups, right? Because their goal is to do research and teach students, and then some research can translate into products. But that's a one good space. But I think we will get into trouble if you don't enable the industries don't start doing research and see some people coming out of the industry to do the startups. That needs to happen very soon in deep tech and science. That's an area of concern, actually, if you ask me.
Mm. What about people coming out of the so-called GCCs? Take any sector today, and there is like a solid GCC in that field in India today. Do you see people coming out of GCCs in any sector?
See, when we started Ideaspring, the whole idea was people will come out of GCC to do products. Products, yes. But if in GCCs, unfortunately, except for a few, I don't know where innovative or deep research is happening. Labs are not there yet, right? GCCs are there, but labs in GCCs is very limited. You have GE, and your examples are far and few between. Microsoft has labs. Google still doesn't have labs, but they have good work going on. I don't know if it's Google Labs or happening through Google, the technology side. So if you look at labs of GCCs, it's still very small, yeah.
Maybe I would expect maybe like things coming out of the biotech part of GCCs they may be like, because they'll be doing research here also. So. Whereas in the IT side, it's more, I think, implementation of things, right? So not the core research. So that's what I guess.
But what about companies like Intel and AMD? I mean, they have massive.
See, that's what in Intel and AMD, when you want to come out, the capital cost is very high, right? So if you suppose say Intel is somebody is working on some real high-end chip, they want to come and do something in India. We don't have the ecosystem to support them yet. Okay, so you have the talent, these engineers have worked on the best products or whatever, but if they want to do something here, do you have the ecosystem to support them is the question. That's still a challenge. For capital is a challenge, market is a challenge, and in case of semiconductors, even the design partner is a challenge, right? Somebody in the US sitting in the US will not be a design partner. That's hard to match.
There have been efforts, but yeah, still it will take some time. There have been efforts to actually help in the semiconductors, the semi-X at ID Bombay and all. But these things will take time.
Patience is required in these spaces.
Okay. I'm going to circle back to how Ideaspring works from one day to the next. As I came in, I saw you were deep in conversation with a potential investee company, and you were asking a lot of questions. How has early stage investing changed for you, if it has in any way?
So, I mean, look, I tell our life as an investor has four parts, right? You have to raise capital, you have to invest capital, you have to grow the capital, and you have to exit this capital. Okay, doesn't matter what you do, you have to do these four things. And at various stages, you'll be concentrating on one of these four or more than one, whatever, right? Like, for example, if you look at our time, our life today, we have to exit fund one. So exiting is becoming important. We're raising fund 3, so raise capital is becoming important. Fund 2 companies are now doing the rest, the next raise. So we have growth that is becoming important. And fund 3 we already have started investing, so we are doing all four at the same time, and that's hard. So hopefully once we get rid of fund 1 companies, and life becomes easy, little easier. But that's okay. It's fun. It's fun to go through these cycles and learn. And there's a lot of learning. We are constantly learning across fund 1 to fund 2 to fund 3. There's tons of learnings. I'm sure when we do fund 4, we would have learned a lot from fund 3. So it's like, because we never did this before. We are founders, entrepreneurs, whatever, just jumped into becoming investors and running a structured way. But that's been a lot of learning. Thankfully, we knew a little bit of it. But we have made tons of mistakes along the way. And then fund 3 is a lot better in terms of how we are looking at things fund 1 and fund 2. But when we go to fund 4, but how we construct fund 4 will be very different from how we have constructed fund 3.
Say a bit more about that. I mean, any thoughts on when you say it's constructed differently? What are all the different?
So fund 1 and 2 and 3 also, we are kind of then we had ICs that people known to us, and it's been great experience. We continue to work with them, but as you start to talk to institutions outside of India, they require certain other ways of they require LPAC, LP committee. They require then some. They have questions on how the IC has to be constructed. We say, oh, everybody has to approve a deal. They say, no, we don't like the fact that everybody has to approve a deal, because if somebody wants, they're looking at risk factors, right? If somebody wants to say no for whatever reason, but if 6 other guys have said yes, then you should still go ahead with it. So as we are starting to talk to external investors, institutional investors, they are looking at more, in terms of risk. It was funny because we spoke to one institutional investor outside, and the institutional investor said, what's your management fee? We said 1.5. No, we should take 2, because only then you'll be able to attract talent. Right? Some fundamental assumptions we have made in building fund 1, fund 2, fund 3 have to change when you do fund 4, when you talk to these institutional LPs, because they are looking at risk factor. For them, I'm investing money in you. How do I make sure you're handling the risks appropriately? So this was never an issue for us till fund 3. So that's why I'm saying these are some of the things we are learning from fund 3 as we talk to institutional investors, and these learnings we have to put into place when we construct fund 4. So I'm sure fund 4 construct will be a little different from fund 3 construct, because we'll continue working with the same people, because we have had great relationship with our IC and whatever. But how you construct it might be different. IC might, rather than being part of the IC, they'll say external advisors, whatever, to enable larger institutional folks to come in and address their concerns appropriately. Because at the end of the day, the fund has to survive based on institutional investors. It can't sustain based on retail investors. So we have had a lot of dependence on retail investors from fund 1, fund 2, a lot of retail investors. We are reducing it in fund 3. It has to reduce even further in fund 4. So that's another structural change you have to look at. So this is what I meant, that fund 4 will be constructed very differently from fund 3.
Is it reasonable to assume that fund 4 will again be 3-4x the third fund? Because that's kind of what you've done with 1, 2, 3.
I don't want. You have not even closed fund 3. So let's close. We'll do this and then we'll think. See, the deal is the fund size has to be dependent on your thesis, your capability, and what you want to do. So we are doing a few things in fund 3, like saying we'll have a third bucket to invest in growth startups. Let's see. We have to learn how that goes, and if that goes well, then we might say in fund 4 that bucket can go in. So I think you have to run through a few deals in fund 3 and learn from it, and then worry about how should fund 4 look at.
That's what we've always done, right? Like learning from fund 1, make changes in fund 2, and combine that again to make changes for fund 3. So it's too early actually to talk about the construct in fund 4.
Okay. Let's talk about sectors. I mean, we there are sectors that you're already investing in, but from a fund 4 perspective, what are some areas or
fund 4 or fund 3?
Fund 4. I'm saying from a fund 4 perspective, what are some areas that, or subsectors, or even slicing and dicing it, that you're keeping an eye on, which you sort of intuitively feel by the time you are ready to invest from that fund, these may be subsectors that will be ready for your money, but not yet ready today.
Yeah, I don't know. Yeah, fund 4 I think is a little farther ahead, because we are just early stage in fund 3, right? So few areas that we are very clear on in fund 3 that we want to invest is, in quantum, we say we want to look at quantum sensing. In semiconductor, we're saying that, we need to invest in companies that are making chips for India and go up the stack. We are looking at a few in the robotics space. So I think we are very clear on the short term that we are looking at in front of biotech, right? Biotech side. So I think Fund 4, we don't have, to be honest, great clarity yet. So we have to build on what we do in Fund 3, and then that will give us some insights into how we have to grow. See, I think, but one thought we have, I don't think you can still say I'll go deep into one domain in India. In 3-4 years when we start Fund 4, I don't think we would have reached potential to say, no, I will only look at semiconductors, I'll only look at bio. I don't think we have reached that point. So I think we still have to be a little bit agnostic on the sector, and then see which capabilities we are building in what sector, and invest in that appropriately. But since we are still very early in Fund 3, I think, I don't know, I don't have enough visibility to say how it will look in Fund 4 yet.
Okay. A related question is, can you both talk about, and again, sort of harking back to the point that there are so many places and maybe a bit of frustrations in terms of not having enough money for our founders here. So how do you look at it as an investor? I mean, in places, in areas like robotics, nuclear fusion, and even in quantum computing, eventually I would imagine these are going to be expensive, sophisticated hardware products, right? While of course there'll be a software component. How do you look at making meaningful investments in such ventures in India?
So I think we still have to pick and choose, Hari, in the sense, we are very clear we're not going to invest in quantum hardware, right? Because the cost, computing, right? Building quantum computers, although there are a few companies that have raised capital. I think our thesis is like, if you were to invest, is a lot more money that will be required. And number two is selling from India also to the world when you have these kinds of, might be much harder. So that's a combination, right? The market and the capital is still bothering us when it comes to real deep tech. So as a thesis from Ideaspring, hence we say, if the capital requirements is very high, then we should stay away, right? And that's what happened with us in Fund 2 in terms of space also, right? Because we thought, rightfully or wrongfully, that the amount of capital that will be required will be high, and we are a small fund. So even if you invest a small amount, the ability for the company to raise the follow-on rounds will be very hard, and then hence we should look at it very cautiously, and that's the decision we took, right? And then, but however, there has been some breakout companies in that space, right? But that's okay. We had a thesis, we stuck to our thesis, and sometimes you're right, sometimes you're wrong, right? So that we are still conservative with that respect in terms of, if you have to invest, we always look at where will the next round of capital come from, right? And sometimes, your decision is right. And like I said, other times you might just come out looking conservative, but wherever we have invested, we have kind of seen traction coming in. Like, for example, we invested in AcceleQuant only because it was a software layer and we think we can accelerate and it can make a huge difference, and hopefully quite confident that the outcome of that will be good. So hence we have to pick our sectors, our thesis, and stick to our thesis. The goal is to have a thesis, stick to it, and keep on refining it as and when you learn more, right? So that's, looking at the space sector, like in the third fund, we might take a little bit, stretch ourselves a little bit more in terms of when the capital is required. But if it is like $50-100 million, then it becomes harder.
So there are some startups in India, right? Even in nuclear fusion, there are companies. Robotics, definitely there are multiple companies. We have a full art park ecosystem coming up. So how do you look at it? I mean, in terms of partnering them. I mean, as a technologist, do you see that there is a meaningful effort happening here? I mean, can Indian robotic companies maybe become suppliers of some critical aspects of the overall, robotics play? As in, maybe go narrow, but go so deep that you make one thing that is the best in the world. It can fit into something that somebody in Silicon Valley is making. I'm just thinking a lot. How do you look at it?
At least okay, whatever we have seen. Some of them have very good tech.
For example, can you make a universal actuator? So, so yeah.
See, it looks like China is way ahead. That's what I keep hearing. Okay, so we have to figure out a way where the way I look at it is okay. Like, can we start investing in robotic startups which already have, say, proven some deployment and making revenues, so that like there is that's covered, and then they can try to go outside India and actually sell there also, because like, the proven robotics company is what I would actually like go ahead right now at this point of time. Very futuristic. We I think we actually have to understand what's happening in the world. Let me be very frank with you. So actually, I have even been told that okay, I think we should start going and attending robotics conferences outside, to understand what's happening, uh, because some of the technologies are way too ahead outside. So building a world class company in robotics from India, I don't know it. Okay.
Yeah. Yeah, and the rate of change is just
So it's
mind-boggling, right? Every other day, some new things
new
coming
things
up,
are
new deal is being announced. Fanuc is doing with something with Nvidia, and
no, that's that. So big guys coming together and trying to do, that's a huge.
yeah. Mm. Okay.
But it's still an area of interest. Physical AI is an area of interest for us. So we are actively looking at it.
Hmm. Hmm. Okay, fair enough. Okay, as we begin to wrap up, I want to ask about Skyroot, because I think the billion-dollar valuation has caught everyone's imagination. Uh, Maybe it's too early to say Flipkart moment of deep tech in India, but would you see that as a Flipkart moment of space tech, or is that also too early to say?
See, I think it's already happening. The space tech in India has picked up quite well, right? The consortium, the Indian government enabling. I think you can still see. I said today, read the news that Blue Origin rocket blew up. Right? I think what you're working on is quite complicated. Right? Although I know Pawan quite well and wish him all the luck in his first launch that is coming up, but we have to be prepared for something's going wrong, because there are hard engineering problems, hard scientific problems you're solving. But in my opinion, space sector is already well recognized and it's already got there. I think we have to be patient. There will be failures along the way, but we'll learn through those failures, right? And because that's what happens in space. You say both SpaceX and the Blue Origin rockets are blowing up. It's very hard. But already are there. We are already arrived, is what I think. We will deploy more satellites through our rockets, and hopefully more satellites will go from the likes of Pixel and Galaxy and other guys. So I think it's quite well positioned, and India is being recognized also to a large extent.
Okay. So on the biotech and sort of drug discovery side, since you've already made some investment, like for example, uh, very focused target of vitiligo medicine. There again, when it comes to the point of advanced clinical trials, money is a problem, right? You still have to.
In those cases, we just have to have a strategy that as soon as we we are done with phase 2 clinical trials, we'll onboard a partner. I think we don't have the ability to go all the way across India, across US. Very, very difficult. In the short to mid term, we just say we get to that point, but at some point we'll onboard, we'll license it out to somebody with much deeper pockets. I think that's the way to go. However, in biotech, it might be a different story. Like some of the investments that we have done in biotech, like KCAT and Fix 44, I think we can get to the market ourselves. So if you're going therapeutics, yes, hard, because the cycles are long. It's like again saying, right. It's like training a foundation model. It's a capital that will be required, which is hard by us. So we should have a strategy to say in the near future we'll license those. And that's what we are going to do in Aham.
Even though we are able to do a lot with less money in India in those aspects, also compared to what it costs to do the same thing in the US.
Okay. I just sort of remembered the question I wanted to end the conversation with. Um, just as you have sort of new generations of founders and startups coming up, in the VC world, uh, have you seen anything that's noteworthy in terms of the next younger generation of VC investors and how they think? And I'm sure some of your own team members are in that cohort. Uh, Anything that sort of just comes to your mind? How are they different, or anything else?
Yeah, I mean, in terms of AI, I think it's very differentiated. We are some of the younger guys are very hands-on in the sense they are playing with the models quite a bit. They're playing with the tools, and so AI kind of breed of investors has to be very different because you have to be in it. And if you're not in it, you're not knowing what's happening, so on and so forth. But if you get to other areas like space and robotics, and that those are well tried and tested industries, I think there's not much differentiator there in terms of young versus medium versus old like us. We are in the old category now. But AI is very different. So I kind of, although I try to catch up with a lot of things in AI, I think you might need dedicated folks just to say I'll only look at AI investments. You cannot say I'll be horizontal and then say I'll also do AI. That is very hard in today's world. Moving at a
Because things
furious
are moving
pace.
so fast that unless you are in sync with that, they're outdated every 15 days, I would say. Or
Every
less.
night?
Every night, actually, yeah.
So on that point, are your processes automated in any way?
So we are working. Actually, we have automated all the bit of deal sourcing also and deal triage. So that's something which is automated. Like we have a system which goes and finds interesting companies which meets our thesis, so we can outreach. That's one way. Other thing is people send decks to us, so it's all automated now, scoring everything. So we can always look at the best deals which we suits our thesis. But we are doing more. We are doing more to look at portfolio management and all that.
So every organization has to use AI. It doesn't matter. Every organization across domains, across sectors, across MSMEs or whatever. Everybody has to use AI. I think that day has come.
See that one of the good things about doing all these things is that we are spending time where it's really required. Humans are needed, right? Some of these things actually can be automated. So that way it frees up our time and we can be more productive.
Yeah, give me an example of that. As you automated it, what are you able to do that for you is sort of more soul satisfying as a VC investor?
So I spend more time with portfolio management. I'm trying to do that because, like, at least see the thing is when we find a good startup, we can spend more time with them rather than actually doing more meetings where just to understand what they're doing, right? So now we can go more prepared also. So that is where actually we can have more engaging conversations.
So as a VC, your job is to meet and read. Okay, whatever you can do to optimize on meeting more people and reading more, wherever you can take it away and then enable something that enables you to do these two activities really well, you should do it. And AI coming in, like, if you're getting 100 deals, if you only have to look at 20 deals rather than looking at 100 deals because AI is looking at the other 80 and saying, no, it will not fit your thesis, you have saved that much time.
Yeah.
Right. So there are a lot of ways you can save time that will help you to optimize, to spend time where you really need to spend time. Because meeting people, AI will not do it. And reading also, AI might give you snippets, but you have to spend time personally reading, right? Because it has to go sit in your brain, not some outsourced foundation model.
So I guess the world of having an AI alter ego of yourself to go and meet the other person's AI alter ego that's probably still science fiction or maybe a Hollywood movie and
Yes,
not a.
yes. So at this point of time, yes, because you exist, you have to go to work. Right? No, you cannot. You can have a digital twin answering somebody, but you're not building relationships. A digital twin will not build relationships for you, I guess. That's still physical touches, handshakes are still required. That's our way of thinking, right or wrong. For we believe in handshakes still.
That's it for this episode. You'll find the relevant links to the investors' bios and Ideaspring's website in the show notes. To support my work, please subscribe to my posts as indiatechreport.in. I'm Hari Arakli. Thank you for listening.